So this 4-hour time frame is really important because if used correctly, you can see the entire move from the previous trading week, and this will help you determine where price is going or where the high and low for the upcoming trading week will be set. Now remember guys, your only job as a Forex trader is to locate the high or the low of the time frame that you're trading. Since we're going to be looking at the 4-hour time frame for this video, then your job is to locate either the high or the low of the week, because the 4-hour time frame from line to line shows what price has done for the week. If you look from this line to that line, you will see how price moved the entire last week. This was last week's move. So your job as a Forex trader is to locate either the high and low of the week and trade from either one of those spots. Your best trades, your most optimum trades, right? Your highest probability trades is to trade the high or the low of the time frame that you're trading. Understand that. Let me say that again. Your best trades, your highest probability trades will either come at the high or the low of the time frame that you're trading. Now in this video, we're going to take a look at the entire top-down approach. We're going to start from the monthly, the weekly, the daily, and then I'm going to show you guys how I use the 4-hour time frame to enter trades. It's going to really show and give you a good understanding of why the 4-hour time frame is so important. If the 4-hour time frame is the time frame that you're going to incorporate in your trading as in the new level strategy. Alrighty guys, let's take a look at the 4-hour time frame. So this is how you would approach the market every single week to really dissect and figure out, not only which direction the market is going, but when to take your trades on a weekly basis if you're swing trading this market. So here's the top-down approach. Here's the exercise that I do that properly shows you how to trade the 4-hour charts. And once we go through this exercise, you will understand why the 4-hour time frame is so important. Alrighty, so let's start off on the monthly time frame, and we're looking at New Zealand Swiss franc. So from the larger time frames, from the monthly as well as the weekly time frame, what I'm basically looking for is to gather direction of the overall trend of the market and to kind of mark out where the trend could reverse or the trend could change. So here's what I mean. So I know this is a down market, right? So I'm just going to go ahead and mark a trend line right here. Right here. It's the overall down market. Or you don't want to go too far out. So actually the trend is right here. Right? So that's what we're looking at so far in this market on the New Zealand Swiss franc. Alright, one touch here, there's another touch here. We're projecting or predicting another touch will come up here and start this move down if this move hasn't started already. So again, we're not looking to trade this, we're just trying to get a feel for the overall direction, and we know that the overall direction is down on this market. Okay, now let's go to the weekly. Okay, alright. So you see our trend line is still in place. The weekly tells us a little bit more information, but still, we're only looking to get a direction of the overall trend. Okay, but we can also see some levels here, where some support levels as well. So what I see here, I see a nice level of support. Make that a little bit thicker, right? So that's support. Resistance, right? And that's all I want to do. That's all I want to just, mark out. We don't want to really be looking to trade on these larger time frames because these are extended. These are really big moves. So it may not be in the immediate direction that the market is going now. But okay, so that's my weekly. I marked off my levels. All right, so let's go to the daily. All right, so you see my trend line. Let's compress this a little bit. You see my trend, my weekly, my monthly trend line right here. Now we can dig in a little bit more. All right, so So now I know I also got a trend line right here. And I go far out, but you don't really have to go that far out. You don't really have to go that far out setting the trend. So, okay, so the downtrend is still in play, right? Still in play right there, right? My resistance level is right here. My major support level from the last move to the downside is right here. Support, resistance, resistance. Alrighty. So I may be able to get a move. I'm already seeing where I may be able to get a move at least back down to this level right here. Alright. But now, so this is where we would get the signal on the daily time frame. But we would always take our trades on the 4-hour time frame. So here's when it comes in, why the 4-hour time frame is so important. So let's go to our 4-hour. So understanding which way the market is going and actually knowing how to trade the market is two completely different things, right? Anyone can see that the market is in an overall downtrend when you're looking at it from the monthly, weekly, and the daily. But when you go down to the smaller time frame, we all know that the market doesn't just move straight down. It's not going to just move straight down. You know, the market has retracements or pullbacks or whatever you want to call them. So even though you're in an overall downtrend, you look right here, the market for a week and a half moved all the way up. Moved all the way up. I say a week and a half because, again, from this line to this line on the 4-hour time frame is 1 week. So it moved all the way up. But now it's getting back in line with the dominant trend, which is to the downside. So this line to this line represents last week, right? This is the current week that we're in right here. This is the move. So how would you trade this week's price action or this week's or the pair for this week? Here's what you would do. So you only want to trade in the dominant direction of the trend, right? You don't really want to take these buy trades unless you're a very experienced trader, because then you counter trend trading, right? You can make a lot of money counter trend trading, but you want to be very experienced. And just to give you the heads up, you want to counter trend trade off major levels of support and resistance. Okay. The reason why is because you don't know when these trades are going to turn around and get back in line with the dominant trend. Right. Sidebar. But back to what we were saying on the 4-hour time frame. The reason the 4-hour time frame is so important is because if we look right here where the week started, and we know we want to trade to the downside, which is the overall trend. What you essentially want to do is you want the week to print the high of the week. You want the week to go ahead and make a high for that week, right? Because remember, your only job as a trader is to trade off the high or the low of the week, depending on which direction you're trading. If you're looking for buys, your only job as a trader is to locate the low of that week and then buy it up. We don't trade the in-between stuff. Well, you can trade it, but you have to be an experienced trader to trade these things. But as a new trader, right, you only want to trade off the high and the low of the week. If you're swing trading, depending on which direction the market is currently going, right? So if we know the high of last week was here, because remember, line to line equals 1 week. This is last week. This is our current trading week, right? We know that we're still in a downtrend until the high of last week is broken. Think about that for a second. If the high of last week is broken, which is the 4-hour time frame, it shows the week. So when I'm saying a week, guys, I'm talking about the 4-hour time frame. Right? Because the 4-hour time frame shows you what the price is doing for that trading week. Okay? The weekly charts shows you what price is doing for the year. Okay? But the 4-hour time frame shows you what it's doing for the week. So when I'm mentioning the week, I'm not talking about the weekly time frame. I'm talking about the 4-hour time frame. So we know that until price really breaks this level of the previous week, meaning until price trades higher, we know we're in an overall down. We're still in a downtrend. So for this week, the only thing we would be looking for on the 4-hour time frame, since we know we want to trade to the downside, the only thing we would need to look for is where is the weekly high? On the 4-hour time frame, where did price print the high of the week? Where is the high of the week? And then you can use certain things like candlestick structure. You could have certain entry triggers. You can use your momentum oscillators. You could use your moving averages. There's a lot of different entry triggers that people use. You know, you decide which is best for you. But before you select the entry trigger, you have to understand what the charts are doing. So on the 4-hour time frame, that's why the 4-hour time frame is so important. You want to look for the high and the low of that week. Remember, the 4-hour time frame shows the price action within the week. So depending on if you're buying or selling, you want to look for the high or the low of that week. That is why the 4-hour time frame is so important, because it is a time frame that I commonly trade on. Trading a new level strategy, you can get great entries on the 4-hour time frame, and you can ride those time frames for 2 to 3 days. 2 to 3 days, because the market, it tends to reverse after 2 to 3 days of one extended move, right? This is the exception. This is definitely the exception. Although this could be like 3.5 days. This is definitely the exception. But the market tends to reverse. It's called midweek reversal after a few days of an extended price move. You usually have 3 pushes. So this would be 1 push, retracement. This would be the 2nd push. This would be a 3rd push. I would look for a reversal, either coming here off this level here, or a reversal from this extended level to the downside. Either or, but again, this is why the 4-hour time frame is so important, because it shows you, it gives you a great time frame to trade. If you're trading for that week, you know that you're looking for the high or the low of the week that you're trading, depending on the direction you're trading. If you're buying, you're looking for the low, and it makes everything a little bit clearer for you to understand what's going on in the market. So that's why the 4-hour time frame is so important. Alrighty guys, Forex King.